You're all enjoying the destruction of the dollar, and you're enjoying your rise in wealth with the gold. Hey everyone, Jason Barlow with Sell for 1%, joined by Dave Barlow, Jamie Barlow, and Rich Cercone of Equitable Mortgage. We are the Barlow brothers of Sell for 1%. And Rich has a market update for everybody here on YouTube for 2 minutes. Rich, take it away, sir.
Hello, Jason and everybody. Well, I wish I had better news for the gang, but we are not seeing positive results with interest rates right now. Inflation numbers continue to be hot, and most recently we had Jerome Powell speak yesterday, and he said he kind of tamped down the idea of higher rates by saying that he's going to take a wait and see approach to see if these hotter numbers are actually a trend or maybe just a blip on the radar. So that kind of helped interest rates to not continue to go up yesterday. They didn't, not that they went down, but they stopped going up based on those comments. So that was one positive thing that we heard yesterday from Uncle Jerry. And from there, pretty much the 10-year Treasury bond, guys, it was 380 not that long ago, and it's 438 right now, almost 440. It's touching 440. That's a huge move in interest rates when you see a move like that. The people probably are trying to ask me, okay, what are the rates right now if I buy a house? They're pushing 7% with good credit. You can still get into the high sixes with good credit and a nice down payment. But with any kind of negativity at all to your situation, not that it's negative to you, but maybe the way that the market sees it, you could easily be over 7%. So that's where we are right now. But houses, I'll tell you this much: houses are continuing to sell. Columbus, Ohio. We are moving forward, and I think a lot of people realize buy it. It's only going to appreciate more, and hopefully I'll be able to refi somewhere down the road.
Yeah, I think that's the balance, is buy it, and then hopefully some point in the future you can refinance.
Right. And if not, that means rates continue to go up and you did the right thing.
Exactly. Yeah, and just from a buyer agent perspective as well, the whole idea is, the competition's only going to get hotter if interest rates do go down. You think you can't buy now. Just wait till interest rates are around 6, 5, so on and so forth. So that's my take on it.
Yeah, I have a whole army of people in my pipeline that have that idea that as soon as rates go down, they're going to start looking again. So the price of that home is only going to go up because of supply and demand at that point.
Yeah, I have a client that they bought like 2 years ago, and they've had a job change, so now they're moving. But they were talking about how they could have bought, back in like 2019, and they thought even in 2019 the house prices were too high and they were just going to wait. And then they ended up spending like another $100,000 more to buy the house because of the appreciation values. And I think the appreciation values that we're talking about is going to continue to go up just simply because there's not enough supply. It has nothing to do with anything else. We talked about this before. MORPC had an article in the Columbus Dispatch about 6-7 months ago. Another 700,000 people moving into the Columbus area over the next 20 to 25 years. Where are they going to live? And as that supply, becomes smaller, we're right around 2,300 active listings in the entire Columbus MLS. And we're selling 25,000 houses a year, and you only have, and the entire MLS goes from Marion to Circleville, from Newark to Springfield. There's a lot of houses, 1.2 million homes in that circle, and you have a little over 2,000 available to buy. So it's going to get worse. So buy now, work your rate, and if rates go down, You can always refinance. If rates go up, as Rich just said, you made a smart decision. So, plus the fact, and this is something we don't talk a lot about, you get the benefit of writing off your interest rate, writing off your property taxes, as part of your income taxes. You can't do that with rent. And so if you're paying $1,500 a month in rent, that's just going out the door. If you're paying $2,000 a month in a house payment, not only are you building equity, the appreciation value each year, but at the end of the year, you get to write off taxes and interest. So it really works out to a $1,500 a month payment after you get those write-offs. So anyways, a lot of good things, I think, in purchasing a home. So call us now, right, Jay?
Yep, I think if you listened to me, you guys all bought gold, right? So everyone's sitting pretty. So you guys are all
Don't buy a house.
You're all enjoying the destruction of the dollar, and you're enjoying your rise in wealth with the gold.
And homes.
It's interesting in the market with the rates. And so if you like the content, leave a message below, ring the bell, be notified of new videos, be sure and subscribe. And any comments, call Jamie, call Rich, call Dad.
No, don't.
If you need advice on where to pick up gold and silver, give me a shout.